Good morning, Hong Kong, and welcome back to another episode of Hong Kong Insurance 101. This week, we're going to be looking at directors, officers, and shareholders protection. Now, organizations building an insurance portfolio often overlook the risk presented to the company by directors, officers, and shareholders. Senior employees, including C-level executives and directors, can erroneously view themselves as insulated from many of the mishaps that may concern ground-level workers. In many cases, the only relevance senior employees have on a company's insurance coverage will be their satisfaction, or lack thereof, with the business's employees' benefits and health insurance offering. However, this does not take into consideration the fact that no matter a person's seniority in a company, that individual is still only human. They are prone to making the same mistakes as other employees and suffering the same accidents as other workers, even if their impact on the company is more visible and more widely distributed. A number of Hong Kong business insurance products exist to help companies manage the risk presented by senior employees and critical staff members. In the case of SMEs, these insurance offerings can even assist with repurchasing shares of a deceased shareholder, keeping business interests within the business. Now, when employees mess up and their work is full of errors and omissions causing a customer or third party to experience a loss, that individual or entity is entitled to seek compensation from the business at fault. The form of insurance protection for this eventuality is professional indemnity cover. When a company doesn't perform up to its advertised standards, or when an employee has failed to properly protect a client, then professional indemnity insurance will provide coverage for the legal costs of fighting that claim, in addition to any judgments which are found not in favor of the business. While senior employees are protected under a company's professional indemnity insurance, this type of protection really exists to protect the business, and consequently the employee, from negligence, misrepresentation, and the intellectual property claims brought by third party. Directors and officers insurance financially protects the company and senior directors and officers from lawsuits alleging wrongful acts. The Dno Insurance Policy covers legal defense and judgment costs in the event that a director or responsible officer is found to have acted wrongly. Dno Protection is different from professional indemnity coverage in that it deals with claims that arise from third parties as well as those which arise from within the company itself. If a manager is having a hard time paying employees on the correct date, they are in breach of their fiduciary duty, and consequently the company is in breach of its fiduciary duty. But outside of employees behaving poorly or illegally, how would your business manage if a key shareholder died? Should a shareholder die, shareholders protection insurance allows the business to repurchase that individual share from their family or whichever entity inherited those shares upon that person's death. This can be important for a small business or a startup, especially those concerned about the impact of an inheritor on the business. Shareholder protection insurance is essentially a contract between shareholders that should they die, their shares will be eligible for purchase by the company. There are a wide range of business insurance options available in Hong Kong that can insulate a company from many of the risks it will face, even some of the less obvious ones. That's us for this week. As always, we hope you have a happy and healthy weekend. Remember to like and subscribe to stay current with all our content as it comes out. And don't forget to ask CCW. We're simplifying your insurance.